We talk about JP Morgan saying the US facing a quicksand scenario in terms of yields. PIMCO ready to think about negative yields. Bank of America saying the 10-year yield may be under 1% in a year. Do you want to join the bond bulls or do you look for returns elsewhere?
Well, I think you look at the bond market, on any mid to long term investment horizon, it's a pretty unattractive place to be investing. But I've been wrong over the last 6 months on that. 30 years negative, the entire German bond market negative. US Treasuries, I think, could go further down from here, but I think in the longer term, governments and policymakers are going to want to try and drive some kind of growth in the marketplace.
Yeah, and of course that reach for yield as we all get older is going to push us in a whole load of different directions. Paul, what do you make of the yuan fixing this morning? The patter from the market seems to be is that they want us to rest easy, that is slightly stronger fixing than we thought. But are you convinced?
Well, I mean, it's very clear that the Chinese want us to believe that they can control that currency. So it's quite odd that the US are calling the Chinese currency manipulators. That's exactly what you do when you peg your currency. But I think they do have the ability to fix that peg. What I would say is the market wants a strong US dollar. And if you're pegging your currency to the US dollar, then you're getting less competitive with the rest of the Asian complex. So they're becoming less competitive, just like the US is complaining about being less competitive with China. The Chinese are becoming less competitive with their main competitors. So they want to have a basket of currency approach. And when you look at it against that, actually the yuan's been quite strong.